Hello, Oracles. Well, it has been a wild year so far in the market. Yeah, it's let me just clear this out of here. Yeah, it's been quite crazy. I've seen some crashing in some areas, Tesla in particular crashing down. If you guys have been following the channel for a while, you have known that I've been kind of calling this. And realistically, sorry, let me straighten this out. And realistically, it's not so much a crash. It was just kind of like a coming back down to earth because I don't think we should have been at the levels that we were at as it was. So, that to me is really what we kind of did. We just came back down to where we should have been, and now we're just kind of recovering. And of course, I did say, and if you guys saw the video yesterday, that I was expecting this bounce today. We had just been so sold off. I was definitely expecting that dip. Nice job, Sith Lord, buying the dip. Nice work on that. And from here now, it's just I'm paying attention to what's going on with the whole macro environment and Tesla in particular. So I thought we were going to be waiting until Q1 earnings to come down to fill that 218 gap. We still technically have not filled it. Actually, I'll bring up the charts in a minute. So we technically still have not filled the 220 or the 218 gap. So there's still a little bit of a gap there, but oh, Dad wants me to speak up. Is it quiet, guys? If it's quiet, let me know. I will see if that helps. Let me see. There was an update on my computer, so things may have gotten a bit off. But let me see here. Yeah, just let me know if you guys if you can hear me okay. What's going on, Alex? TSLQ last Monday cashed out way too soon. Yeah. There's definitely there was the dip, then there was the next dip, and then it just kept on falling. And then of course we got the massive pullback the last couple of days. Well, Monday in particular. Then it kind of leveled off, and I'll bring the charts up here in a second. But but yeah, that was really what I was looking for, and I'll bring the charts up so we can discuss it. But yeah, I was looking for that 218 gap to fill, and then sure enough, we came down to where I thought, and now I'm just waiting because I don't know what's going to go on in the macro, and obviously there's a lot of tariff concerns, a lot of uncertainty, and of course the market doesn't like uncertainty, so we just kind of wait and see. And so looking at the chart, massive bounce up today. So we had the pullback Monday, kind of hit that bottom right around 220-ish. And then we saw the rebound yesterday, and then the big gap up today. So now, of course, we have another gap here at 237. So we got the gap at 237, and we still have the gap down. Where is it? Why is it not showing? Should be down here, unless it filled midday. Maybe I missed that, and it did get filled. It may have gotten filled midday yesterday at 218. So now the gap down below us would be at 147. So there's that gap at 147. It's very strange. I didn't think we came down to fill it. Hey, I missed it. Cool. I'm not perfect. Definitely made a mistake. But either way, that gap did get filled. Now the question is going to be, where do we go from here? Trump came out and says, hey, he's going to buy a Tesla, condemning all the people who are damaging the Teslas and this and that. So clearly he's paying attention to it, and there's some discussions about it. Whether it's going to turn into anything real when it comes to Tesla, that's going to be the next question. So that's one of the things that we have to remember is there's a lot of sentiment swings when it comes to Tesla stock. And we saw that from the election until now. Huge sentiment swing. And it wasn't just Tesla. It was a lot of different areas of the market as well. We just came back down to earth. So now the question is going to be, now that we're back down to where we were prior to the election, where do we go from here? So now we're going to be paying attention to the earnings as we go forward. How are earnings, tariffs have come in, but they haven't fully taken effect. We haven't felt the effects of all of these tariffs other than sentiment and what the market thinks that we're going to be feeling from it. Sometimes it leads to a self-fulfilling prophecy. So we just pay attention to what's going to be going on with all these tariffs. And then we have to see how are Tesla's numbers going to be doing? Because at the end of the day, I don't care what the sentiment is, it comes down to the bottom line. It comes down to the numbers. Are the deliveries there? Is the revenue there? Is the bottom line there? Is the EPS there? All of that. That's going to get factored in when it gets to earnings. So we're going to be getting on April 2nd the delivery numbers for Q1. Then we take a look, and that immediately will tell investors and institutions, all right, well, we're going to take that number, now plug it into our valuation models, see what we're going to end up coming up with for Q1 earnings. So you're immediately going to get an adjustment one way or the other, regardless of what the sentiment is. And, sometimes the hedge funds will play the sentiment and say, hey, we're, not feeling good. So you may get a good number and then it sells off. So that's why I never play delivery number things. I never play earnings, things like that. You start looking out long term, as most of us are long term investors. You start looking at long term and you can say, all right, well, where are the numbers at and growing? Now, people like my father who are swing traders can take a look and say, hey, what is the sentiment? Maybe the sentiment is actually going to make a difference in the near term. So that is something for a swing trader to play. So looking at just the numbers here, again, knowing where we were at, swing trading from, 218, 255 up to the top, selling around that 480 mark and then coming down was pretty easy to read. Now where we're at, we just need to find that healthy bottom. We found a little gap here, so we may get a pullback. Is, don't forget, the market always overreacts to a lot of things. So see a reaction in one way, and then you see the overreaction in another way. So, Alex, I think the tariff rhetoric has started to wear off. Market isn't taking what's being said at face value anymore. That's another thing too, is you have to remember the market is extremely efficient and quick reacting. So whenever there's something that's said, or when you get interest or news about tariffs or interest rates, things like that, you're going to get a market reaction, and it's going to immediately get priced in because the algorithms that are out there are going to do math faster than any of us could possibly do it and sell off accordingly to those specific numbers, whatever the algorithms are based at. So that's why we see news come out, market moves in one way or the other immediately. So when you get all the tariff news coming out, the reason why uncertainty is the biggest issue is because the algorithms can only go by what information they have. But if there is no information to be had, then there's kind of a limbo. And then there's lower volumes. And then when you have lower volumes, the market can move significantly more one way or another. So until you get clarity, and then once you get that clarity, obviously money comes in or goes out based upon the clarity news that we get. And so that, I think, is what's going on. And to your point, Alex, you get the tariff rhetoric that's out there, and just the talks and discussions about it are, all right, well, the algorithms priced it in the first time. Then obviously Trump said, all right, we're going to kick the can down the road 30 days. So the algorithms are like, all right, tariffs are off. Kind of saw a little bit of a bounce after that. And then tariffs back on, sold off again. So now that we're kind of at that point, you're like, all right, well, now we see what the pricing in of the market is for tariffs. And as my dad said, exactly, it's not so much about the tariffs, it's about inconsistency. So when you don't have the consistency, how could you possibly, do anything in the market? That's why a lot of times when there's, inconsistency in the market and uncertainty, a lot of institutions will be like, all right, well, we're going to kind of put some money on the sideline. We're not going to make any moves, because institutions deal with a lot of money and they deal with a lot of other people's money. They're not just going to make, moves based upon whatever sentiment moves they hear. Institutions are not swing traders. Institutions go out there and say, all right, what is the information for real that we have? Now we're going to invest accordingly. So once we get some clarity as to what's actually going on, that's when you're going to see the real money coming in or flowing out, whatever it's going to be. But right now, we kind of have more clarity on tariffs, but not really. So it could be still some more uncertainty. I still think that the next, 6 to 12 months are going to be a bit uncertain. So I've related this year to potentially being like 2022, where we see, some falling down, and then maybe we get some bounces like we got today, but that's just kind of a giant year-long dead cat bounce. And I think some stocks are going to feel it harder than others. Like Tesla was down over 40% from its peak to the bottom that we hit recently. So, we can see a little bit of a bounce up and then falling back down again. I still think we may pull down and test the $200 level. But at this point here, I'm more reactive to what's going on in the market than anything else. Now that we've seen where Tesla's at, I'm just, as I have money come in, I put it into my portfolio where it tells me to put it. That's just kind of the strategy I've been playing. And I just went to see my accountant for my taxes, and one of you guys, any of you guys who are doing dividends, just make sure you pay attention to, obviously the difference between qualified and non-qualified dividends, ordinary income dividends, because it factors in. I tried to do the math on it based upon capital gains losses that I had and write-offs that I had for the house and for the YouTube channel and things like that. I try to balance it off. And this year with the house and the tenant, I don't know where I'm going to be falling at with numbers. And so looking at how much money I had coming in for non-qualified dividends, it was like $5,000. So I'm like, I wanted to make sure that that's not too high. So I'm trying to work on that. So I may end up having to sell some of those off depending on where I'm at, and I've got to make some decisions. So, I want to have that cash flow coming in to take advantage of these dips. But at the end of the year, I also don't want to be paying taxes on that, because then it just kind of negates the whole point of doing all of that. So once my accountant gets back to me, I'll have some more information and I'll be able to relate back to you guys and let you know what's going on with taxes and just how to kind of play it for your own portfolio. Just because taxes are very important. Like to my dad, retired, he doesn't have the same income, so he's in a lower tax bracket. So for him to swing trade, that really make a huge difference. But me, I'm still working full time and I'm in a higher tax bracket. So any ordinary income dividends that I get, any capital gains that I get, they're going to get taxed as ordinary income. So I'm going to be paying like 35 to 40% on that. And I'd really rather not. So I'd really rather invest that money into something else, like improving the house for myself and my tenants, than putting it into the government for them to spend it on whatever they want. So I'd rather put it to me than the government. Yeah, exactly. On again, off again. Market seems to not know how to respond. Yeah, and that's it. So buying the dip, and you look long term. Buying any dips long term when you're looking at 5 to 10 years, except for that one lost decade, basically from the dot-com bubble through the end of the great financial crisis. You look at that, and even when you go past that, just a couple of years, you would have been positive on your money if you were just invested in the market. Obviously, there were some companies that never recovered at all, and ever came back to the levels they were at prior to the dot-com bubble. But for the most part, the market itself will recover. So if you're in a broad-based index fund like the VU or even SCHD, something like that, it's going to recover. Supposed to be a meeting in Canada tomorrow. Don't be surprised to hear an announcement to delay tariffs. Yeah, so it seems like obviously, these trade wars and tariff wars are going on. So we tariff Canada 25%. Then they come back and they start hitting some of their electrical grid customers that are here in the U.S. and New York and Michigan and places like that, and Minnesota. So, we come back and Trump is like, we're going to do 50% now. And these negotiations are going to be going on. And realistically, as Trump had put it, it was not a matter of we're trying to get the upper hand, and we're just trying to level the playing field. There's a lot of other countries that are out there that have tariffs against us, and we don't have anything against them. So it's like, hey, there's a huge trade deficit. Let's balance that off. So we're just going to basically match the tariffs that they have on us. And you got to work that out. What are the benefits and losses to all of that? Obviously there's a whole lot of other things that go into it. But there's going to be negotiations. And I think a lot of it just had to come up with, instead of sitting back and doing nothing and just letting it be, Trump is going out there and kind of being like, all right, well, let's make some changes. Let's at least start some conversations. And to start those conversations, he did it by just going out there like a bull in a china shop and saying, here's all your tariffs. Now let's talk. That's the Trump way of doing things, whether you agree with it or not. That's just how he does it. And that's how he's doing it right now. So we'll see how it all plays out. But, to the point we've been saying, we don't know how it's going to play out. The market doesn't know how it's going to play out. And so the market, is going to, based upon history and how the tariffs in the past have, affected the whole entire economy and the market, we'll see how that is. Because realistically, if the tariffs do stick, historically what ends up happening is it always trickles down to the consumer. That always sucks, because the companies don't want to take the hit on their bottom line. But if they're going to increase the prices for consumers and then lose sales because of that, and maybe somebody else doesn't go up on those prices, maybe they don't end up raising the prices on us as much. Maybe they tried to find a balance. Let's say they end up finding a balance where the consumer takes 50% of the hit and they take 50% of the hit. Well, the problem there is now the consumer has less money because they're taking a bit of the hit. And then you're going to have the bottom line of these companies not be as strong. So you have a worse bottom line. That means the entire stock market's going to end up pulling down. stock market pulls down, you end up seeing more layoffs because the companies want to keep those bottom lines stronger. Where do you end up bringing up the bottom line more? You cut labor. So then you see more people getting laid off, less people have money, less people buying, and eventually you see that kind of downward spiral happening until you finally find a bottom. So that could be how this ends up playing out. Trump said he wasn't ruling off a recession off the table. Elon has said himself it's going to get worse before it gets better. So they've kind of laid down the expectations, and I'm not going to disagree with them. So that's kind of where I'm sitting right now is I'm expecting things to get worse before they get better. And until we have more clarity on all of this, I'm not dumping a ton of money in. This was a great dip to buy, but I am by no means going to be dumping a bunch of money in. I'm playing my strategy, keeping 12.5% cash as I start thinning things out after I get my taxes to see where, what I need to do. I've got a few positions I'm looking to thin out of, and I'll start storing up to about 15% cash and really just kind of wait to see how the year plays out. I also want to have some more extra money on the sideline too, just in case. I just had a huge plumbing leak in the house. I had to get that fixed. That was a couple $1,000s. Not pleasant. I need write-offs for the house anyway, but I'd rather do it for a positive investment on the house to improve it rather than repairs that were unexpected. But that's why I have an emergency fund. I had an emergency fund put aside, so I took the money out of that and paid for it. So that's why I highly recommend making sure you guys have emergency funds put aside, because now I didn't have to take money out of my stock portfolio. I didn't have to sell stocks that were down on this dip. Because imagine if I didn't have any money put aside in an emergency fund and had to go out there and sell stocks on this dip instead of being able to buy it. Would have been pretty darn frustrated. So definitely highly recommend emergency funds. I cannot trust what this administration will do day to day. Don't expect any big money going into the market. I agree. But so far, whether you agree with it or not, they've basically done what they said they were going to do. And it's obviously caused a lot of turmoil. But, they say they're going to do these things. Sometimes they have to make quick adjustments on the fly. But he said he was going to tariff, and he tariffed. They've been coming out and doing it. It's obviously been causing some frustrations out there. But hey, it is what it is. At the end of the day, we've seen many administrations come and go, and the stock market has still continued to go up and to the right. So, if a president or administration is going to give us a buying opportunity, I'm going to take it. If they're going to give us an opportunity to have a bull market and possibly sell and swing trade on the way up, I'll take that as well. Whatever it's going to give me, I will roll with it. I can't control it. So the best thing to do is kind of do like you're doing when you're going down a river. You can't control the river, but you can kind of adjust yourself as you're going down and control it in there. So if you just accept where you're being taken and control it within that, you'll be in much better shape. So that's just kind of the way I'm looking at it and playing it. Yep. It's not what you do, it's how you do it and whom you do it with. So together we are on a whitewater raft right now, it seems like, in the middle of a very uh, waterfall-filled river. And we are on this together, folks, and we're enjoying it. At least I am. And we're going from there. And so as long as you're doing it, and that's another reason why I switched it to Wednesday night live streams. Going back to one of the other pieces of my investment is investing in time with family and friends. Friday nights are for spending time with my brother, sister-in-law, and my nephews. So I see them on Friday nights for movie night. Thursday nights, I don't know if any of you guys play Magic the Gathering, but my big nerd side in me came back out. Used to play it when I was a teenager back in the 90s. And now my buddies and I started playing it again. And so there's a guys' night, and a bunch of us get together on Thursday nights and we play it. So spending time with my friends there, doing something that I love, that is what I'm getting back into there. So that's why I switched it to Wednesday. So I appreciate you guys accepting that and moving it to Wednesday nights with me. So now it'll be Wednesday nights going forward, so I can spend more time with friends on Thursdays. And so then you guys, my friends, and obviously my father's family here, will spend time here on Wednesday nights. So I'm just filling up my evenings with family and friends across the board, across the week, and I love it. All right, so let's take a look. So yeah, so Tesla's down, and things going on with Tesla too is kind of the same the same discussions we've been having. There really hasn't been anything that's changed Deliveries still haven't been great. Tesla is doing a lot of financing deals, which, as we learned from last year, definitely hit their bottom line pretty hard. They're doing a strong one on the Cybertruck. With interest rates being higher, there's discussions about Trump intentionally kind of driving the market the way it's going right now with these tariffs and stuff like that, because he wants interest rates to come down. The reason behind him wanting interest rates to come down, because he can't force Jerome Powell to do anything, but he can kind of force the market to go in a certain direction to be able to force Powell's hand to do something about it. And while Powell says he doesn't care about the market either, if you're seeing the entire market come down, that in turn will kind of create a bit of the economy to come down, and in turn that will kind of force the hand to have Jerome Powell lower the rates a little bit. And again, the reason that Trump wants to do this is strictly because of the fact that when the government right now being in such debt, such large debt as it is, if it needs to borrow money, it doesn't want to do it at the higher interest rate. So to help the government in the longer term be able to get itself out of the deficit, it wants to have a lower interest rate to be able to pay that money back on. So if Trump can force it down and then force Jerome Powell to bring the interest rates down, then it kind of does help the government do that. That's the theory behind it. Whether it's going to work or not, who knows? But that's the theory behind what people think Trump is doing intentionally. He hasn't said this. We don't know this for fact, but that's kind of the conspiracy theory behind what is going on at the moment. We'll see if that's how it plays out. But still right now we're looking at the Fed potentially doing maybe just 2 rate cuts for the year. And for Tesla itself, and other, large purchases, that's higher interest rates for longer. That means that the housing market's going to be struggling a bit. We're going to see the entire automotive market struggling. Anything that's going to require a large purchase, equipment like from Caterpillar and things like that, they could all be facing some struggles. Obviously, anybody who can do it and runs a good company is going to get through it. Cat will get through it. Tesla's going to get through it. Automotive makers like GM and Ford, who are highly in debt, could struggle a little bit on this. We'll see. We've already seen, obviously the partnership between Rivian and Volkswagen. We're seeing a lot of other companies partnering up, and I think we could be seeing more of that over the course of the next couple of years. So realistically, I don't think we see interest rates coming down much until 2026. So again, keeping interest rates higher for longer as well puts pressure on a lot of companies, because on any company that needs to have debt that they've got to pay off, they now have to decide, do we pay off the debt? Do we hire more people? They've got to play that balance. Some of them are going to fold. And then if the companies go under, that means more unemployment. So again, we're still not in the clear. We're not out of the woods. There's a lot of uncertainty still out there in a lot of different areas. Unemployment, inflation, because if the tariffs do kick in, inflation could go back up some more. We're looking at, actually, I didn't even check the inflation data today. I believe that came in softer than expected. Let me just double check on this, because I do believe that came in better than expected today. Let me do a reboot on this. Yeah, because CPI came out today, and yep, CPI came in, at a 2.8 versus a 2.9. So CPI came in better than expected. That was excellent. So everything came in a tenth of a point better than expectations. So that keeps us under that 3%. So that also helped the market bounce the way it did today. And so that's very helpful to see that, maybe some of these front-running tariff numbers and people who are afraid about the tariffs trying to buy ahead of time, causing a little bit of the inflation, seems like maybe some of that has played out. So again, that's a good sign to see that we're seeing those numbers coming down. And if inflation can continue coming down like this, that gives the Fed confidence to come down on the interest rates. So the next thing is going to be unemployment. How is unemployment looking? If unemployment is continuing to look good, or at least holding at that 4% range, then maybe the Fed does end up coming down on the rates. But I think at this point, let me see, Alex. We have a 45% chance of a rate cut next week, or is that May? That might be May, because when is the next one? The next one, I believe, is April, correct? I believe that's the next FOMC meeting is April 2nd. I'm just going to scroll through FOMC. Oh, no, it's March 19th. So next week, we're getting the next FOMC meeting. And then, yeah, then I think you're right. I think May is the next one after that. So I don't think we're going to get one now. I think we're going to be anticipating a pause here where we're at, and then we'll end up getting the 45% is probably in May. So I think that the whole thing is that we saw good inflation numbers now. If the next two readings come out, because I believe we get two more readings before the next one. So if we see the trend continue, then we'll probably end up getting that cut in May, and that could be a good thing. And again, who knows? Because if unemployment starts to go up while inflation is coming down, that's actually very bullish, because if inflation comes down and we see unemployment going up, the Fed has that extra wiggle room to say, all right, well, we're going to come down on the interest rates. That should help the unemployment as well, and thereby not cause inflation to go back up again. Because that was kind of the concern that we had back in September and October as they did these cuts, was they cut it, but then inflation got stuck and it didn't keep on coming down. And then you saw unemployment creeping up. But if inflation is stuck and unemployment is creeping up, the Fed doesn't have that leverage to be able to do it, because if they go down on the interest rates, that could allow inflation to get out of control again, and then you get that major issue going forward. So if we can see the inflation come down in the next couple of meetings, again, as we just saw it, let's say it comes down to like 2.7, 2.6, and we see unemployment at least staying where it's at, then I think we're good. If the unemployment ends up coming down with inflation, the Fed may not do anything. The Fed may just say, hey, interest rates are good, we'll hold. That's what they've been saying. And then they can come down a little bit more gradual, but again, we'll see how it's coming. Multicamzilla, one more dip coming. Is 147 going to fill? 147 is going to be, I think, all dependent on how the macro environment is doing, or if we end up getting Tesla coming out, and Model Q has issues, or FSD gets delayed even more, any sort of negative news, because right now what's priced into Tesla is Model Q is coming out end of the first half, beginning of the second half. We are going to continue holding with the EV tax credits. FSD, we're going to have the robotaxi Tesla-driven vehicles in Austin, and then we're going to continue rolling that out by the end of the year. If those all come to fruition, we'll probably stay above the $200 range. And that's as long as the economy obviously is staying kind of where it's at right now. If all those things stay true, we'll stay over $200. But if one of those things ends up not working out, if we end up losing the EV tax credit, if the Model Q, doesn't roll out and give us the ramp like we're looking for by the end of the year, or if we end up FSD doesn't come out in Austin like we're hoping for, there's some major issue, or if the economy continues to fall, then we're going to be in a situation where we're probably going to end up seeing Tesla breaking below 200 and then getting closer to that 147 gap. So those are just the few factors that I'm looking at right now. Obviously, black swan events coming in unexpectedly could change everything as well. But based upon all of the information we have right now, those are the things that I'm looking at. Most seniors have most of their money in fixed income, and they're the ones spending. Lower rates mean less spending and less money to hand down. That too, and another thing on top of that, I was listening to someone else. What ends up happening too is when a lot of the fixed income is out there and interest rates are higher. So you have that fixed income that's out there. Seniors don't want to take that risk. They're out there and they're like, I'm at an age where I don't want to take the risk. I'm perfectly fine with a 4%, solid income, very safe. I'll take those 4% returns all day long. As the interest rates come down, what ends up happening is you end up seeing a flood of people going into the value plays, having SCHD, Procter and Gamble, things like that. People were going to flood into those because they're not getting that same return that they were getting on their, fixed income. So you have that fixed income, you go into those, solid assets. And so, go into that fixed income and the spending, less. Oh yeah. Okay. Now I see what you're saying too. Yeah. The lower rates, less spending, less money to hand down. So, to that point, you have less money coming in. So maybe you put it into something, but maybe you don't want to put it into even, the value plays, because that's still riskier than that, stable, maybe you've got a bond, maybe you've got it in a high yield interest savings account. you put it into those areas and you're like, all right, so now the rates come down, but you don't want to take it out. You don't want to put it into value. So that's less money coming in and so less money to hand down, as my dad said. So, there's a lot of factors in that. So you just, it's so many different things in play and everybody's got to make their own decisions for themselves. So, that is a big factor there also. Do we get Elon back at some point or is he really gone for another whole year from this point? I think because Doge is supposed to be doing their thing until July of next year. I want to say so. Elon's not gone. Don't forget because he was still there, very prominent at Q1 earnings or at Q4 earnings. So Elon's still there. He's still focused on it, and I have no doubt part of the reason why Trump came out and said what he did about Tesla was because Elon and him are having conversations. And even Trump called it Elon's baby, or well, he called it that because other people call it that, the people who are doing the damages. But either way, there is still clearly focus from Elon and Trump on Tesla. So this isn't going to be something where he's gone. He's still there. He's still focused on it. And he's obviously put a huge team in place. Elon himself has always said he's not the one doing all the work at Tesla. His engineers are doing it, his managers, all of the people and the executives there are doing the work. He's just the one who's kind of like overseeing it, kind of like the puppet master, but that's what you do as a CEO and owner of the company is, he's doing all of that. He's kind of directing the things and really driving it and pushing people to do things, very much like Steve Jobs. Steve Jobs wasn't the one making the phones. He wasn't the one coming up with the technology for the phones, but he was pushing the people to get those things done in a much faster rate. So Elon can still do that while doing all the things at Doge and all the other companies that he's got. So realistically, we've got Jerome Powell until I think next May and then Doge there until next July. So I think, Elon will be doing his thing, but we may still see a lot of that backlash from whatever he's doing at Doge for the next year and a half, until he is done over there. So everything he said on the earnings call was the usual sales pitch. Nothing new. The information we're getting is getting stale. I mean, he seems out of touch. Yes and no. I can definitely agree that he's not as enthusiastic as he was when Tesla was basically his only focus. So he's given us a sales pitch, but he's given us, basically what realistically, if you think back just a couple of years, what a lot of institutions and bigger money were upset with Elon on were the unprofessional earnings calls that he was kind of holding, which us as retail investors, we loved it. We loved it because he was like one of us. And not to say he's not like one of us anymore, but he's going out there and basically giving more of an earnings call that institutions and big money want to hear. He's telling us, here's the state of the company. This is where we're at. This is where we're going. This is our focus. This is what we're driving towards. And he's doing it in a manner where he's still saying, we're getting to the point where we're going to get FSD solved. And he's still talking about crazy things in the future, like Optimus and energy and things like that. But it's done so in a manner that big money and institutions are like, all right, that's fine. He's not going too crazy with it, driving people insane, kind of doing the whole, I'm fluffing the stock up by any means. So I think he's found a good balance between what retail investors want to hear and what institutions want to hear. So I'm okay with where he's at there because I would rather, especially with what he's doing with Doge, causing so much other turmoil and frustration around the country, I would much rather him keep big money happy as well. Because if he wasn't keeping big money happy, we'd easily come down and fill that 147 gap. Now, obviously, some of us on here would enjoy that, and I'd love to go buy down at those levels. But I think he's doing a good enough job on those earnings calls to keep the volatility down when it comes to the uncertainty with Tesla and keeping the uncertainty with the economy rather than Tesla specifically and combining the two. I think his divisive role can also create real rot within the company and morale. I worry about employees losing the real drive to forward the mission. That's actually a good question. I would love to see, and I'm sure some people out there must have done interviews with employees with the company and how they feel. One of the things that I know is a lot, just very much like Amazon, Meta, Nvidia. A lot of the employees that work for them because they get the stock options are millionaires. They've done extremely well with the company. So if they're doing extremely well with the company because of the stock options, that there is just the incentive. If they look at it from, their own personal standpoint, if they're going to put their political views or whatever it is into it and make a decision there, so be it. Everybody can make their own choice. But if they're looking at it from their own personal financial standpoint, it may not be worth it for them to stir the pot or do anything about it because they're like, hey, I've got a good job. I'm making good money on it and I have great benefits coming in. Do I really want to make any turmoil or leave this? And some people will feel that way. And that's obviously their own decision. That's nothing wrong with that. But you know, eh, the rot within it, I think, will end up working itself out. Every place I have ever worked, if you have a strong culture, with which Tesla does, and that's why they haven't expanded as rapidly as I thought they might have, because they really want to keep that culture within all of their factories. And if you've got a very strong culture like that, if there's usually some problems that pop up here and there, they kind of weed themselves out. Now, obviously, this could be a larger problem where maybe it's a lot more weeds popping up because of what he's doing. But typically, if you have a strong enough culture, those people will weed themselves out and they'll say, hey, this culture isn't for me anymore. I'm going to go find myself somewhere else to work. And it kind of, usually weeds itself out. Obviously there's HR there for a reason. There's going to be other things that go on, whatever it is. But yeah, I think that the drive is still there. I think the company is still moving forward like it wants to. To your point, I don't see or feel the same energy and excitement that we used to feel a few years ago. But I think COVID and the last few years have just kind of sucked the wind out of a lot of people and a lot of companies. So I wouldn't say it's a Tesla specific thing. I think it's just kind of a global economy thing, and I think we'll get back to that point. It may just take another couple of years. FTC has rules about what you can and can't say on the call. You have a lot of leeway, but you can be get in serious trouble if you stray too far. And Elon has gotten in trouble in the past, so I think that is something that he's trying to reel in as well. He's gone through enough lawsuits, like from 2018 and other things like that, that he's trying to keep himself in check. I always joke, and I like. I'm wondering if there's somebody at the table who, every time Elon starts to go on just a rant or just a kind of screaming off the tail, and I think I keep thinking that there's somebody on the table kicking him to stop him from running and saying those things. And it seems like he's kind of taught himself to reel it in, because yeah, we know he's been slapped with fines and lawsuits and things like that before. So he can say what he thinks the company is going to do. He can say what the company is planning to do, but he does have to limit himself as to what he can really go off and say. A lot of Tesla employees are very left wing. This isn't sitting well with many of them. Here's my thoughts on this, and not even thinking about it politically. Thing about Tesla and how Elon has done this. Obviously we know that a lot of Tesla employees, Tesla customers, very much on the left, because they were all about saving the planet, going with clean energy and this and that. That's what the whole drive was before. But what customers were alienated in that time? A lot of customers on the right who are all about gas guzzlers, things like that, oil. That the right is typically more oil, the left is more clean energy. So looking at it from a consumer standpoint, there was, how do you bridge that gap between that? Obviously the technology over time was going to take over, but how do you get these customers to convert? You're not going to be able to convert the people who are strong on the gas guzzling side, ICE vehicle people. You're not going to convert all of them. There's people who are just like, I'm never changing. That's that, unless they're forced to buy something. But there's some people who are on the fence who are like, I don't know what I want to do. And, if they're going to be buying it from a political affiliation standpoint, they're going to say, well, I don't want to buy a Tesla because it's a left-wing company. Now, with Elon being on the side of Trump, it brings in people who are like, oh, now Elon has some right-wing fans on his side. Sure, you're going to alienate some left-wing people, but the percentages are a lot smaller than people think. There's a lot more people who are buying a vehicle not because of political affiliation. And if you're going to get some people who are now going to have their eyes opened up and be like, you know what, I didn't buy a Tesla because I didn't like the company for what it stood for, but now I'm like, hey, I kind of dig Elon and what he's saying. Let me go take a look at Teslas. and I'd actually be curious to see the numbers, and I doubt we'll ever be able to see them, is what was the conversion rate of people buying a Tesla from the right wing versus the left wing, and how that went? Because the wild thing is the emotional reactions, because all the people going out there causing damage to any of the Teslas right now are on the left wing. They're all people who I can guarantee you 5 years ago plus were all pushing for Tesla. And then, of course, they make these emotional reactions based upon Elon and his decisions, but it's like that swings both directions. So I'd love to see the numbers to see how it plays out. But I know we'll never get those numbers. I feel those people probably already weeded themselves out when Musk supported during the campaign. That's true. Um, I don't think it was going to get any worse. He supported him, and now he's doing the Doge thing. I think a lot of that emotional dust has settled, and people are like, all right, it is what it is at this point, and they're dealing with it. So the people who are there are probably going to stay there. You're right. I'm sure a lot of the people probably got weeded out over the last 6 months. I'm fascinated to see if people really see Trump in a Tesla and suddenly decide it's okay. Yeah, that's true. That seems so basic. People are so easy to sway. They are. Um, you know, I always look back to Men in Black. One person, fine, they're smart, no issues there. People are stupid. You start putting people together in groups and masses, and they start making decisions based upon little stuff like that. And then everybody's like, oh, so and so did it, so I'm going to do it. And then you get the people making terrible decisions. It's awful. That's why I strongly recommend to you guys, and this is kind of how I helped raise my son, was in a think for yourself. Don't just do something because somebody else did it. Always question everything. Maybe what the masses are doing is the thing that you want to do, and it is a good direction for you. There's nothing wrong with that. But before you just go and blindly do it, question it. Is Trump out there buying a Tesla because he's really supporting it, or is he doing it because Elon asked him to kind of help things out? I don't know the answers to that question. So for me, I'm just like, it is what it is. Whether he buys one or not, whether he's in one, I don't know. You can argue that maybe that's part of why the stock was up today. Again, I think Trump just acknowledging what's going on with the Teslas has helped. But yeah, I suggest you younger people read about P.T. Barnum. Yeah, I'm not exactly sure what part of that you're referencing. I just know P.T. Barnum, obviously the circus guy. But yeah, let me see. Trump doesn't drive at all anyway. Yeah, that is true. He's a New Yorker. Yeah. Trump wouldn't be driving. He's going to have somebody driving for him. That's obviously what's going on now. But, him buying one is, whether it's a stunt, whether it's him to show his support, obviously he has the money for it. It's not like it's going to break his bank or anything. He'll be perfectly fine. And I'm sure he'll use it as some sort of write-off for whatever he wants for one of his businesses. So it doesn't faze him at all. Let me see what else we got going on. I'm probably going to jump off in a minute here. But yeah, so I mean, realistically, we're kind of, nothing major has changed. There's not, yeah, Alex, go. P.T. Barnum, I know he did, the Barnum and Bailey Circus. He was part of that. As far as what my dad specifically was referenced, oh, here we go. My dad, he was a scammer that said there is a sucker born every minute. Yeah, I mean, and that's the thing is in business people, and call them scammers. Some people can say, hey, they're a wise businessman. People know that people in the masses are stupid. What do you think consumerism is all about? What do you think commercials are all about? I teach people all the time when we're talking about health and fitness, if there's a commercial for food, it's probably not good for you because they're trying to sell you on some product. You don't see any commercials for cheese. You don't see, Kraft cheese. For real cheese, you don't really see it. You don't see commercials for broccoli. You don't see commercials for vegetables. Like, that's the whole thing is like, if you're seeing a commercial for something, that means that there's somebody out there who's trying to convince you to buy it. Probably not the best for you. Just like anything else. But again, that's what it's all about. That's why once I stopped watching TV, I was much happier. I don't watch TV. I don't watch the news. I'm even getting myself off of a lot of social media. I was making a little bit of money in Facebook. I just stopped doing it because the amount of bullshit that's on there is driving me insane. So I'm like, you know what? Better for my mental health. I stay the hell away from it. So I'm really not on much social media anymore. And I've been much, much happier, honestly. So, I don't get sucked into spending money on things, although Magic the Gathering has now kind of sucked me back in, but that's my friends and that's a fun time. So, and actually it's really cool. Slight tangent on it. One of the reasons I got back into it is because my buddy showed me there's an app called Mana Box, and you can scan all your cards in there. So I can see the value of them very much like the stock market. So I'm like, okay, now my investor brain went off and said, oh, I can actually go out there and buy these cards, have fun with my friends, and it's like an investment. So to me, that's how I kind of put it all together is my brain is constantly in investment mode. Is every single minute I spend, every single dollar I spend, I want it to be invested in something that's going to benefit me or my son or the people around me. So by spending the money on that, I'm investing that time, that money and time on spending time with my friends, building up those relationships. And now I can see the value in it going forward monetarily. So, that's kind of what I view everything for. And that's how I question everything before I make decisions on a lot of stuff is how is it going to benefit me with the investing of it? And when I look at things like when I'm buying food, I say the same thing. Well, it's like, if I'm going to consume this, how is it going to benefit? Is it going to make me happy right now because this cookie tastes delicious, which, yes, I had 4 of them today? Or how is it going to make me feel tomorrow? And that's one of the things, like consistent basis when you're trying to get yourself healthy again. Like I was just at my highest weight at 215. So I'm now down to 203. Very happy about that. But it's all about what am I consistently investing in when it comes to my nutrition? And that helps me get myself happy again. And I don't want to say, how am I going to be reacting now? It's like, that's like swing trading. It's like, hey, is this food going to make me happy now? That's swing trading. Is this food going to make me healthy over the long term? That's investing. And, I play both, and again, I'm not going to turn down cookies that are in front of me, but I don't go out and buy them. So they're not at home with me to consume on a regular basis. After I started investing, I see people in nice trucks and think that payment must have sucked. Yeah, Alex. Oh my God. I thought about that the other, a couple of years ago, actually, when it was like, I kind of stopped doing a lot of the traveling. Obviously COVID hit and stopped that. And I was like, how, I'm sorry, I gotta jump in. No, I am not going to be retesting 215. I don't know if you're talking about 215 for Tesla or 215 for my weight, but I don't want to retest 215 for my weight, but I'm okay with retesting it for Tesla. But yeah, like I see all my friends going on these trips and I'm like, I know that person has no money. What is their credit card debt looking like? Because all I know is that my credit card debt, like was higher and I was able to go on some trips, but not crazy because I was trying to cut down on my debt. Now I see the same thing. I see, wow, that vehicle must be expensive. And in my mind, the only money I have to spend is the money I have that's left over after investing in all of my things. I've got my SoFi account with all of my different vaults to invest and put money aside for the future. Like after all that's gone, my paycheck for myself is very, very small. So I'm like, all right, I can't really afford much. So that's why I'm living the way I live, which is fine because I'm intending to do this so my investments will pay for my life in the future and I don't have to work until I'm dead. So I see all those people and I think to myself, either they are very wealthy and they're way past where I'm at, or they're going to work until they're dead because they've been caught up in that consumerism trap. And, that's one of the huge traps to really prevent is, especially when you're younger, as time goes on, you're most likely going to be getting raises at your jobs, or if you move from one job to another, you may do it because you're getting a higher paycheck. Do not fall into that trap of improving your lifestyle to match your paycheck, because that is exactly how you get stuck, never ever getting out of debt. You want to make sure that if you increase your paycheck 30%, keep your living expenses where they were. If you were able to live the way you were living, there's no reason why you can't do that with the higher paycheck. Maybe like improve a few things. Like for me right now, I'm looking and saying, hey, you know what? I could really use a new bed. That's going to be good for my back. I know it's not good for my back sleeping on this crappy bed. So I'm going to be looking to improve that. But that's an investment in my health. So if you're just getting a bigger house just because you have more money, if you're getting a brand new car just because you have more money coming in, you're never going to get yourself out of debt. Investing assets. Somebody actually, I saw a video the other day of a guy explaining how it all works. And the poor have money come in and it goes just straight to their expenses. Middle class has money come in and it goes to buying a house and a car, and then it goes back up and then it pays for their expenses. The wealthy have their money come from their assets And those assets are what pays for their expenses. So instead of having a job that pays for expenses, their assets pay for their expenses. And the way that you get out of this is by having your job buy assets first and then pay for your expenses. If you do it that way, over time, those assets build up and you'll be able to pay for your expenses with your assets. That's what I'm working on right now for this. And a brand new vehicle is not an asset unless you're using it like a truck for a business, like a landscaping business or construction. Unless you're using it for that, it is not going to be an asset. It's going to be an expense. So you got to be careful with that. Houses could be an asset in the long term, but if you're buying a house that's way more than what you need, it's going to be an expense and it's not going to be an asset that's going to be cash producing unless you're doing something like I'm doing. If you're going to house hack, if you're going to invest in it and you're going to rent it out, that's a different scenario. But that's the assets that we're talking about. Stocks, obviously, especially with dividends, you have those assets coming in, making you money from those dividends. So that's a lot of what it comes down to. And exactly, Alex, literally drive a car that I'm not sure I will get from point A to point B. So, I mean, my car will. I want to make sure I have a reliable car. But like when I bought the car that I have right now, that's exactly what I told the guy. He's like, well, what do you want in it? I go, I need a vehicle that's going to take me from point A to point B as cheap as possible. And I was like, I don't need any fancy anything. I was like, I'll take whatever the base model is. That's it. Done. The car's been doing me great. Love the car. It's taken bullet holes in it. It still has the bullet holes in it. This car has gone down to South Carolina with me. It's gone to Virginia. It has been amazing. I love this vehicle. It's a Honda CRV, just a base model CRV 2016. I call him Vinny because he got shot up at a 20s themed wedding for my brother, very Italian style. So his name is Vinny. And my grandfather's name was Vincent, and my nephew's name is Vincent. So very fitting for the car, and just love it. And I'm gonna drive it until I can't drive it anymore. This year, I'm probably gonna have to put about $600 into it to get the valves updated because it's over 200,000 miles. But that's fine. If I've got to put even and I've got to get new tires. So even if I have to put $1,500 into the car this year, that's fine because that's way better than taking a car and getting a new one and having like a $200 a month payment on it. That's going to end up being, 212, 2,400, no, $24,000 for the year. Math hard, 2,400 for the year. Wow. Either way, 2,400 for the year for the next 5 or 6 years is way better than, is way worse than 1,500. So does it? Doesn't have a bullet hole in it? It does. It actually has 3 bullet holes in it. And they're still there. And it gives me street cred here. So it's awesome. Yeah, refuse to spend money on a depreciating asset. Same, which is why I wasn't going to get back into Magic the Gathering to have fun. Like I wanted to play with my friends and have fun with that, but I didn't want to spend any extra money on it because I have the same exact mentality. But as soon as I saw, oh, light bulb, this can actually act as an investment for the future. Because if I had all of my old cards, I could have had thousands of dollars worth of cards. Don't know where they ended up going. I think I ended up with my brother's cards by accident. Don't know what ended up happening there. Either way, I have some old cards, a little bit of value there. But the cards I'm buying now, I can see the value of them immediately. I can then put them aside and say, I know these cards have value. I'm going to keep them in safe storage. I can use proxies to play the game still with those. And this way I could be safe. And then in the future, I have another asset. So that's exactly why I ended up making that decision to go and do that, because I can have potential assets in the future. First thing every paycheck, I pay myself first. Yep, portfolio. Bingo. Then I figure out the rest later. Yeah, I have in my SoFi account, absolutely love SoFi because it's got the vaults. And so I have my paycheck comes in and it gets immediately distributed into all of my vaults. So the only thing I see left over is what's left over after my paycheck. And so I've done the math on it. So I am hourly. So I get, it's not exactly the same every paycheck, but I get all my money distributed into vaults. I have enough to pay for my expenses like food and groceries, things like that. So I have that money put aside. I have money put aside for all of my bills. So all my bills are covered. And then at the end of the month, when I get my commission check, that money is the extra that I can distribute into other places. And I put it into my vaults. I put some more into investing, or I could take some out and say, hey, I'm going to use this for entertainment or whatever I want. But yeah, same exact thing, man. I love your mentality, Alex. I drive a Nissan Altima with 250K on it. Yep, mine's got about 220K. I love it. The experience hanging out with friends playing a game is also priceless. Exactly. And that's why reasonable experiences seem like a good investment. Exactly. And so that was my thought basis on this, was investing in that time with my friends is priceless. I can't put it on it, which is why I moved the live stream to Wednesday nights, and being able to do all that. And so I'm obviously not going to go and spend a ton of money on this game. But like what we do is, with my two buddies, we have a boys' night every once a month on a Saturday. We each get what we call a draft. So we do a couple of drafts. So we usually get each draft is 3 packs each, and it's costing like $30 for the day for the cards, and then we get some food. So entertainment, hanging out with the buddies, cost me about $50. We have fun, get some new cards that I can invest. And the cool thing is like sometimes you'll get a card and be like, hey, this card that I just got out of this pack is basically paid for the whole entire day. Done. Cool. And who knows what it's going to do in the future for the value. So, it ended up being completely worth it. Love it. So I'm going to keep on doing that going forward. I have a 2019 Model S. I spent $30K on. How'd you spend? Oh, did you get a used one? That's awesome. And we'll drive it forever. Paid cash. Totally practical car. A Model S was practical. I mean, hey, if for $30K, I'm not going to disagree with you there. Hell yeah. Can move anything with a 4-door hatchback, and it looks great. I mean, if I could score a 2019 Model S for $30K, hell yeah, man. Well done. Well done there. That's actually something I'm looking at for investments in the house, just because, I'm going to need the write-offs on it, and looking at places to improve and invest in the house. Probably going to look at, I'm updating my garage, going to turn it into a gym, but I'm also going to be putting a power source, and there's already power in it, but I'm going to put a charging station for a Tesla, because whether it's me or if I have future tenants who want to have an EV, I'll have a place where they can park and charge their vehicle. I'm also looking at getting some power walls at the house as well. I'm going to get solar in the future. The roof is relatively newer, so I don't want to do it yet. But I'll get solar panels so I can have a solar powered house with Tesla power walls. Just a lot of nice upgrades I plan on doing to the house. They're out there. Yeah. I'll take a look, because like I said, I'm going to keep my car for as long as I can keep it. But my next car, I do want to be a Tesla. So when we get to that point, I haven't decided if I'm going to go new or used. I'll make that decision when I get to it. But to know that that's a possibility out there, I'll keep my eye open. Thank you. My dad with the 2014 Honda was 75K. And in the Hondas, yeah, I mean, the reason I got a Honda was because my parents had a Honda Accord in the 90s. Loved the car. Very reliable, very good car. And so once I got myself a high enough credit score to be able to actually buy a car versus leasing one, I traded in my lease and got myself a Honda CR-V. I was very excited. And Honda was the only one who was willing to work with me to get out of a Nissan lease. So I got myself that Honda. Super excited. Very happy. In this market, we ain't got 30K. True. I mean, save my pennies. So I do have, that's actually one of the vaults that I have, is my car fund. I put $25 every single week into a new car. So whether it's the money I take out to put into the current car, or whether I'm going to, use it to buy a car in the future, I'm putting that money aside. So I am literally saving my pennies, to be able to buy a new vehicle. And when I'm at the point to get a new one, I will have that money saved up and be able to at least put a down payment on it, if not buy it a whole one entirely. All right, guys, we've been on for an hour. It's time for me to get myself to going to bed. Love chatting with you guys as always. So again, going forward, I'll be on Wednesdays, unless I let you guys know otherwise. But Wednesdays, same time, 6:30 p.m. See you guys in the future. See you guys next week. Love hanging out with you. Have a great night, guys.